Oh man, we are 14 hours away from a critical close on Bitcoin, which could lead to some altcoins not making it through this bear market. Yes, I know that sounds drastic, but that is the reality we will be facing if Bitcoin in the next 14 hours cannot close above this EMA ribbon. Breaking down below this EMA ribbon could not only spell some more pain ahead, but could potentially, from a technical level, mean we could be going back down to test our previous lows of 15,500. Now that sounds shocking, but if we do get to those levels, it is almost guaranteed that there will be altcoins out there on the market which will not survive the liquidity strap that would then occur. In this video, we're going to break down exactly what can happen here, what are the key levels on Bitcoin, and what can it mean for altcoins. Smash some likes, don't forget to subscribe if you appreciate these updates, even on a Sunday. Hope you guys are having a good Sunday wherever you are. Now, as you can see here, guys, we are approaching our critical weekly closing. I've said this for a long time. We cannot afford to lose this EMA ribbon here on Bitcoin, right? Losing this EMA ribbon is something we worked so hard to regain it, right? Ever since we were down here at 15,500, nice move into our EMA ribbon. We got thrown back down again. We won it back again. And since we've been above it, breaking down below would be a critical coup for the bears. The bears will be rejoicing because they've struggled here. For the last couple of weeks here, we've managed to hold it. But during this week, with all the stuff that was going on, particularly with the Fed telling us there's going to be more than one rate hike, we did wick below it. We fell as low as 24,750. If we stayed at those levels, we'd be below our EMA ribbon, guys. The exact level that's going to be is 25,380, in that vicinity, okay? So if we close today down and lose around $1,000 on Bitcoin today before the close in the next 14 hours, we'll be closing below our weekly EMA ribbon. So far, so good. We're holding up a little bit positively. Now, we did have a little bit more positive news come out yesterday. There was an agreement between Binance US and the SEC on how they're going to freeze the funds. It's not a total freeze, and that's a positive sign. Nonetheless, it's still not great, right? The SEC come out with no evidence, and they're able to get access to the funds of Binance just by accusing them of commingling funds and accusing CZ of being able to access the funds, even though they presented not one iota of evidence, right? This is crazy. But at least they didn't shut the business down. That's what they're trying to do. They're trying to shut the business down completely by doing a complete asset freeze. They wouldn't have been able to pay salaries. They wouldn't have been able to pay any costs and supplier invoices, etc. And they would have been basically done without any evidence, which is a shocker. But thankfully, the judge saw a bit of common sense and said, go compromise. I'm not going to grant the TRO. That's positive side. We also had the Blackcoin ETF being filed. Now, again, I shared my thoughts on that. Make sure you go watch that from 2 days ago. I'll link that up here because I'm not too convinced about it. But that being said, it still is something that's positive for Bitcoin in a very difficult time when the SEC is choking crypto, suing Binance, suing Coinbase. At least we had a better end to the week. And speaking of the better end to the week, if you see here on the chart what we're looking at, this was the start of the week, right? We started off the week fairly flat. Tuesday was fairly flat. And then boom, big fall down here on Wednesday after FOMC. Then we had Thursday, Friday, and Saturday. Nice recovery here, bouncing off the blue line, which is your 200-day exponential moving average, and showing a nice move into the EMA ribbon. But that's exactly the problem. We're moving into our daily EMA ribbon. And if you know anything about EMA ribbons, when you come into it from the downside, they act as resistance. And that is exactly what the bears are hoping to achieve right now. The bears will be hoping to rejoice around here and set their shorts. They'll be looking to short from this EMA ribbon for another potential move down to the 25,300 level. So don't for a minute think that they're not going to be trying that. The question is, are they going to be able to do that before the weekly candle closes in 14 hours, or are they going to need momentum coming into Monday and Tuesday? Remember, weekends are thinly traded. So if the bears wanted to make a targeted move now to get that weekly candle close in the next 12, 13 hours, they can do so. You can easily manipulate the Bitcoin price to get the closes you want. And big market makers who have bad intentions can do that as well. So you have to watch out here on the volatility later on today, heading into that critical close. I will be watching out for that. The other thing to look at is our key horizontals, right? Let's bring out our horizontal levels. And what do you see? Yep, just like the EMA ribbon, we're facing overhead resistance, and this time in the form of the level at 26,600. This is proving as a tricky resistance overhead now, and if we cannot beat it, then we're going to have to come back down to 26.2 at the very least, right? And then losing 26.2, that is when you then have a big sharp drop down to 25,000. So we've got some precarious levels here on the horizontal charts. Now, of course, if we can break above it, that would be the ideal situation. Get above it, retest, start working our way up to the next green line, which is 27.3. That would be the nice next major level. And as I always say, when you look at the work that Bitcoin has to do here, there is a lot of overhead resistance. Let's start with 31. Then you've got 30, right? Then you've got this level here at 28.4. There's so much overhead resistance here that Bitcoin has to break out of. And the better way to look at it is to look at this falling wedge. And this is the structure that Bitcoin's in right now. So yes, the rally was nice. We averted a break to the downside, right? We managed to avoid this with our nice move here on Thursday, Friday, and Saturday. Brilliant. But we're still hanging here, right? That's not great. If you were powerful here on your move, you'd at least get to the top, fake out a breakout to the upside, and try work your way to the upside. That is what I want to see. Now, the other thing I don't want to see is I do not want to see this just do this and then hang, boom, boom, and do that, right? We need to see this momentum come, push up toward 27.1, 27.2, try to break out, even if it's a fake out, because if it's a fake out, at least you can come back here, regroup, and go again. Right? We need to get the positive breakout from this pattern. Remember, a positive breakout brings you up towards 31 at the top of the 30 at the top of the 31, sorry, at the top of the wedge here, breaking to the downside, and there's very little support until 24.3. And then the worst case scenario, if you fail at 24.3 and fall again, then you're looking at 20,000, which would be a nasty fall, would lose our weekly EMA ribbon. And that's then what brings us onto the conversation of the altcoins. Because can altcoins survive? That's the reality. When you think about altcoins, a lot of people kind of they misunderstand altcoins. They think they've just got this like infinite lifespan and they're just going to be fine because they've got this hopium inbuilt. No, altcoins are no different to startups. If you've got a young startup that is not yet the next Facebook or WhatsApp or Google just yet, and they're trying to work their way through a difficult economic situation, they need funding. Right? They need liquidity. They need help. They need runway to operate their business. And there are many, many projects out there who have just by the skin of their teeth survived Bitcoin falling down to 15,500. And just because they survived it once, it doesn't mean that they can survive Bitcoin at around 20,000, 19,000, 18,000 again. And that's the worrying sign. Yes, projects can survive a certain bear market. Hopefully, the smart projects, which I think are the ones that are still around, many of them today are some of the smartest projects because they survived a long bear market up until now. But it's these final innings of a bear market, these little bits before you get close to the halvening and you know the relief valve is pulled out and everybody's excited. It's that little bit where you can get companies who haven't quite done their maths right, who haven't quite figured out what situation are we going to be in, what's our cash flow, what's our runway, do we have enough to survive? Or maybe in their pricing model, they thought that Bitcoin would be at 30,000 right now. And they did not price in that Bitcoin could lose its EMA ribbon again and fall down to 20,000 again, like I just showed you on this chart. And that can mess up their calculations. It can mess up their reserves. It can mess up how much runway they've calculated. And altcoins could be in trouble. This is why on this particular move, it is so important that Bitcoin is able to hold above the weekly EMA ribbon. Not for Bitcoin's sake. I think Bitcoin will do well long term. But as Bitcoin falls, a lot of altcoins will end up in painful situations. I mean, let's now flick through some of these altcoins here on the weekly chart. And what we'll do is here on the weekly chart is we'll start to look at how precarious the situation becomes. I mean, let's start off with Phantom here, right? Phantom, look at where we are right now. So as I just showed you, Bitcoin is still above its weekly EMA ribbon. But many altcoins, and Phantom being one of them that have performed a little bit better, are far below its EMA ribbon, not even close to the EMA ribbon. Right? They're hugely retraced already. I mean, if you look at these levels here on Phantom, you'll easily be back at lows and potentially creating new lows if Bitcoin wants to go down to 20,000, 19,500 range, right? It's not going to be fun. If you take a look at another one, take a look at something like Solana, right? This is the action you're looking at on a coin like this. They're not in fun situations. They can easily be coming down and testing these lows. In this case of Solana, going back down here and testing $7.96 again, right? This is why it's critical that Bitcoin is able to hold, because all these altcoins could be posting in new lows. I mean, look at Cardano. Last week, when the after the FOMC meeting, it did post a lower low than it did in January and December, right? These are painful moments here for altcoins. And if you're not positioned correctly, you could see your portfolio absolutely decimated. And so my message here for all of you guys as we head into a critical weekly close is, all the altcoins you hold, altcoins which you have conviction in, would you hold them again if Bitcoin went down, hypothetically, I'm not saying it will, to 10,000, to 12,000, right? You should only have the strongest projects in your portfolio. You're in a bear market right now. In a bull market, if you want to get a little bit reckless, hold a coin for a little bit, for a couple of months and sell it, which you don't have full conviction in, that's your personal choice. But in a bear market, Absolutely not. You cannot afford to hold it. Now, the other thing I've seen people do is fall for this fallacy of the sunk cost. This is a huge psychological investing mistake, which I've made in the past and I continue to make. And that is, you should only be holding a project now, which you think can do good here or there. Right? You're heading into a bull market soon. And you should be holding a project that could do well today, not holding on to baggage from the past because it's 90% retraced. So you hold a coin which is 90% retraced, which, by the way, majority of coins are hugely retraced right now. And you say, no, I'm loyal to that coin. I'm going to hold it in the bull market. It's going to get back to all-time highs. Right? What if it doesn't? And maybe in the back of your mind, you know that something has fundamentally changed. I mean, Solana's a great example of that, right? Solana, through this bear market, has changed fundamentally as a project, right? If we take a look at the chart here, it's changed, right? We know what happened with AFTX Saga. We know what happened with their downtime. You know, you may have lost some conviction in a project like Solana, or maybe you built some conviction. But my point being is, if you don't believe in this project from today up until the bull market, forget about the sunk cost of what you've lost. It's better to put whatever capital you've got left in projects which you genuinely believe can not just get to all-time highs, but multiply that, right? Forget about what happened in the past. It's a write-off. Right? Consider it a write-off. Put it in another project because those projects are 90% retraced too. So you're not going to lose. So hopefully that gives you guys some perspective. Do not fall for that sunk cost fallacy. It's caught me out many times, caught many great investors out many times. If you appreciate this update on a Sunday as we head into a very, very important weekly candlestick, smash up likes, make sure you subscribe. Don't forget to go watch this video here, and I'll see you in the next one.